All right, our friends across the pond. Good evening. I suppose it should be 8, 9, 10 o'clock, give or take, for some of you out there. It's the middle of the day for me. Seems a little weird. So give me a second to get situated here. All right, we got the little message out there in Discord. We are live now. Welcome, welcome, welcome. Glad to see you guys here. Don't be afraid to say hello in chat because, we like to have a conversation while we're here instead of just me talking because, you can only talk to yourself so much. So here we got Bitcoin. It's 2:59, so it is 17 seconds before we close out our 2 o'clock candle and open up our 3 o'clock candle. We did see a bit of a move to the upside earlier. Nothing too crazy here, but about 4 o'clock in the morning. That's kind of Asian market style, at least 4 o'clock in the morning Eastern time. Was able to push the candle up about $73, which all things considered is really not that much. But the important thing about that particular candle is this guy right here, besting the 20 on the hourly chart. So again, we talk about this all the time. Time frames do mean something. They are important. What happens on a 1 hour chart that seems ultra bullish on a daily chart results in absolutely nothing. So it is important to take those time frames into consideration. And that's going to be a bit of a segue into topic that we're gonna touch on a little bit later after we go through some of the market stuff, and that's what type of trader you actually are. You may think you're one, however, you couldn't be further from that. And that'll help address some of the questions that came yesterday in the Discord when people were asking, how do you know when to hold a coin for longer, and situations like that. So we'll get into that in a minute. For now, the hourly chart is working its way up. Of course, in this zone, this olive green zone is going to be resistance, as we can see right here. Tweezer top or double, well, not a tweezer top, a double top in that region did end up pushing the price down, and they're working on trying to get that back at the moment. All right, as far as the 4 hour chart is concerned, it's a fairly good reversal. This doesn't look bad at all. Again, we do have to sit through this ranged out area. Breaking into that area is not going to be easy. So we're coming from the downside in order to do that. Last time we were able to do it was through two really strong candles that ended up pushing through range, came back to sit on top of range, pulled back to get the bottom of range, and then we got the big move up, about a $400 candle move up on the 4 hour chart. You can see the levels, though, are respected. So coming down, finding support zone down here, pushing back up and having a little bit of a 2 period, an 8 hour to 12 hour zone of sideways before a push up through to the next area of resistance. And that goes on and on and on and on and on. And that's something you can see a little bit better on this particular chart here, how it sort of just relegated everything to its trading range. These are all levels. All the red ones are levels. They all make sense. They're all historical to this price action from the drop, right? So this is the initial drop under the 200 moving average on the daily. From there, all these levels have been maintained, used, and abused time and time again while we've been trading here. So for the last week, 2 weeks or so, it's nice to just get an idea of what we're actually doing. And what we're doing was a staircase step down pattern that was given a sideways to a drop, sideways to a drop, sideways to a drop, sideways to a drop. So we walked down the staircase, and each time we did was a violent move down right? Followed by a period of time where we had sideways action. So whether it was accumulation or whether it was just indecision or whether people were just getting comfortable at that price before they attempted to make the next big move. Now, out of all of these, nothing was particularly bullish. We did have one decent candle here and a fairly good run that lasted, upwards of 3 to 4 hours, but really nothing to write home about as far as price action is concerned. When we can write home is when we can achieve a new level to which this had a chance, but you could see the resistance was heavy. So 1, 2, 3, 4, 5, 6, 7, 8, 9 hours all trying the same zone, all trying to get 84.48, and they all failed, in which case we came right back down and we skipped 2 levels and dropped all the way down right back into range. So this range area is, we could see how relevant that price action is. And when we look at the overall structure of what happened after the drop, a majority of all trading has taken place inside this zone, whether it was a support or flip to a resistance or flip back to support, is neither here nor there. It's that a majority of the trading all happened right here. And it makes a lot of sense. At the top of this range is 8,200, and 8,200 is a weekly level that we have on this chart here. So if we go to the 24-hour chart, here you can see this pink dashed line. That's 8,200. 8,200 is a weekly level, so let me put the weekly chart on and you'll see where it's derived from, and that's this guy right here. All right, now it's technically, I think, 8,217, but because of the local price action, we changed it to 82. It just seemed to make a lot more sense, and you have to be flexible like that. So this is a weekly level. This was your last major high. This is your last major failure before the inevitable drop to the 2018 low, which was down here on December 10th, I believe was the actual low. Yeah, right there for that week. All right. So this is an important level. We like the level. The level makes a lot of sense. It's got confluence with 618 zones over here. As far as this local move here, it's a little bit below the 5. Or above the 5, below the 618. So the level makes a lot of sense, all right? When we look at just the daily again and we take everything off and we're just looking at moving averages, yes, we are still very, very, very much under the 200 DMA and also now 2 days under the 20 daily moving average, which is the red one right here. So the 200 is orange, thick orange. The thin orange is the 200 EMA, right? We're on the daily chart, so it's the DEMA, so DEMA. All right, and then you have the 20 right here. That's the thick red one. So the cross under is very bullish. That's something that you can see local, and you get a better reaction quicker than you would, say, something like a death cross where the 50 crosses and a lot of that action already happened. You know what I mean? So if we say like the 50 crosses over here, technically it started over here. Like that was your point to go short, not all the way over here. However, that could really catapult this thing downward if enough people trade it. You know what I'm saying? So part of trading, besides technical and fundamental, is the emotional part of it. Human behavior is crazy. It's so crazy that they have an entire science dedicated to studying how humans behave, the cycles that they repeat, the things that they do consciously and subconsciously, and this goes back hundreds of years, right? This is not new. That's where we get something like a market cycle from. That's where you've seen that chart over and over and over again, posted 15 million times a day about, panic, euphoria, doubt, whatever. The 13 stages or 14 stages of a market cycle. There is something to be not taken as lightly when you do start getting those signals and you see other traders react to them. So you could do one of three things. You could trade with them, you could trade against them, or you could pull and sit on the sidelines and allow them to battle it out, and then you hop on the moving train. So if everyone's going short, and it does indeed go short, and it does find a ton of resistance north of it, then that could be an ideal situation where you might want to go short. Likewise, the other way around, if everyone's saying short, but you get a gigantic spike, and now you're back to 10K, well, now you have to take that for what it is. All right? There are patterns that show long, okay? Currently in the Gartley pattern, right, that we see over here. That's the big green one. So the big green one is a bullish Gartley pattern. This price action has all been locked in, right? So it's very difficult to get a good harmonic. And when you do get a good harmonic, their strike rates are pretty fantastic. So all things considered, I put a lot of weight into a harmonic as opposed to what people call for on Twitter. But that's just me. All right, that's just me. We talked about this last night, so if you guys do watch the replays, I don't know I don't know who watches them, who doesn't, but we did talk about the local structure, and the local structure is a low, a high, a higher low, a higher high, and a higher low. This needed to maintain above 77 and change, and that's this level right here. If it were to dip lower than that, it does sort of invalidate this local uptrend. All right? And by local uptrend, I do very much mean a local uptrend. It starts 925, so less than a month. However, all structure is in place. Now, is this local uptrend beating its head against a major resistance? Yeah, of course. This is 200 right here. That being said, right, we talk about support and resistance. We talk about static and dynamic. And we know the more you bang your head or the more you smash your feet on a level of support or resistance, the more likely it is to eventually break in that direction. So yes, this has held as resistance, as resistance, as resistance. We do know this is a strong level of resistance. We do have local resistance coming down here in the form of the 20, just adding more sell pressure to the current structure that we're looking at. However, if they're unable to achieve lower lows, you don't want to fight price action. If price action is showing you long, then you want to go long. You don't want to feed into the fear of everybody else and sell short if there's no reason to sell short. Now, you can argue that all day long, and you can argue it through 100 different medians. Some traders will absolutely say no matter what, if you are under the 200, you stay short. And I agree with that to an extent. You absolutely can, right? If you're going to short anything under the 200, you are within bias, meaning that you're not really counter trend trading, so your risk becomes a little bit lower. You add to the risk pool if you're going to counter trend trade. And if you're going to counter trend trade, then you reduce your capital position or your position size just a little bit more than you would had it been a continuation trade, or had it been a within trend, or an established trend, or a pullback trade, or a breakout pattern that is well established in an uptrend. Things like that have less risk. where anything counter trend period is already more risky. Does that make sense? So every trade has an allowable risk factor, right? Based off of you as a trader, what you're willing to put on the table as far as that trade's concerned, how much capital you're willing to risk is number one, but how risky is that trade? In other words, what's your strike rate when taking reversal trades? What's your strike rate when taking continuation trades? What's your strike rate when taking breakout trades? What's your strike rate when taking harmonic trades? And then each one of those is within context of the market. So for a breakout trade, let's just say for this trade not that trade, clearly, for that trade right here, which is a breakout trade, this is your pattern, this is the breakout, this is the retest. So for a breakout trade within context, this is coming after a major drop off of what? Another breakdown trade. So this is a breakdown trade that never got its retest, where this is a breakout trade that just got its retest. Very simply put, this could easily push itself way up here, way into the 97, 98 zone, establish a retest for this pattern, and then break all the way down into the 66s. So taking it one step at a time, you have to allow yourself to look at what you're trading and then decide the context of the actual market. Are you in an uptrend? Are you in a downtrend? Is your overall bias long or is your overall bias short? What are you doing on the weekly chart? Some people will just look at the weekly and they'll look at this right here and they'll quickly say, okay, price is underneath the 20 on the weekly, I'm bearish. Done. That's it. They don't need to look at anything else. This gives them their clear bias, and from here, they only take shorts. That's it. No matter how good the long setup is, they will not long until they are over the 20. And then it's longs only, no shorts, no matter how good the opportunity looks. I don't do that. All right. I like the bias, so I like to know where it's at, but I allow for counter trend trades. I just reduce the risk by reducing the position. You understand what I'm saying? So if normally my risk on a particular trade would be 2% of total capital lost, still keeps me as a trader. I may find my position size with that 2% and cut my position size in half. So in all considerations, I'm down to 1% risk, right? Because it's a riskier trade as opposed to something that is continuation, well within trend. All indicators are pointing go. Everybody's long. We're good to go. Rock and roll. Very little risk. Stop loss is tight. Excellent support. New crossover information. Confluence from RSI, MACD. The whole 9 yards. You know, like the holy grail of trades. And then you go full position size. Some will even go over than their regular position size and risk more. Although we don't try to. It's a bad habit, so you don't want to get into that. You can always risk less. You don't want to be the guy risking more because it's a bad habit to get into, especially if you start doing really well. Because when you don't, you end up using that same methodology to try to get it back, get your losses back quick, and you end up finding yourself down a rabbit hole and nothing left and no longer a trader. All right, let's talk about dominance real quick. Dominance, excellent push on dominance right here. The push back from range, the channel retest, dropped it down, found support on previous structure. This is what we wanted. Dropped it down from structure and held this support. This is what we talked about this morning, is this level that it just found and it really liked for whatever reason. It got its push off of that, retested the support zone, flipped it to resistance, pushed it down, and sat on that level again. Today, we have finally broken it, but I have to get my time straight, because generally I'd be looking at this and we'd be closing in the next few minutes. Now we're not closing for another 5 hours, so anything could happen here. We can clearly see the last 3 days we were all trading underneath it. It could be around the same time. It could not be. So this can easily push back up, and then we have nothing to talk about. But if it does close under that level, then we have something to talk about. A little premature to talk about it for now, but it is what it is. All right, now, back to Bitcoin on the daily, back to the support levels that we're looking at. Previous structure levels, although not the greatest levels as far as the meat is concerned, because we said 8,200, right? That's the meat. This zone right here is a really good zone. The levels underneath, we've used them in the past, right? We used them here, we used them here, we used them here. They acted as support and resistance, so we're using them again. The drop down here is back down to 77.33 before hitting our 7,600 zone, which is now weekly structure, daily structure, and 127 extensions off of recent moves. So there's a lot happening in this lower section. It's just a matter of, is this gonna be a break that amounts to nothing, in which case we'll get further lows later on in the day or tomorrow, we'll start pushing to the downside. Or is this something that we can get behind and say, all right, well, as far as reversals are concerned, it's really not bad. Now, the major thing that this actually has going for it as far as reversals are concerned, well, is really the pattern, right? The symmetrical triangle over here is a breakout play. So breakout plays, now this one but more often than not would have broke to the downside, because the preceding trend was down. So price would have came down, right? And you got 1, 2, 3, 4, and then 5 would have been your 5 point, right? And then a push to continuation. This so far is becoming a 1, 2, 3, 4 point reversal, and now reversing the price action to the north side. Now, I know retests, sometimes they happen right away, sometimes it takes months. But a retest is a retest, and even if you didn't like the pattern, that means nothing. You don't have to like the pattern. It's nothing more than a support resistance flip on an upper trend, which is this guy right here. So you would have, just take a line. If you don't like the pattern, then don't look at the pattern. And just take a line and just do this. That's fine. Nothing wrong with that. And now what you have is resistance, resistance, resistance. So you have a confirmed trend. It's validated, right? The trend is going down. Everything underneath it is resistance. Breakout play, flipped it to support. Confirmation candle says go long. And that's what you're looking at. That's it. Again, it's a counter trend trade because you are under the 200 and you are also under the 20. So there's a lot happening just in that one little ballpark right there. But it is what it is, and that's kind of what we're looking at the moment. All right, so let's see. We got some new names in here. Tobias, hello. Demkos, seen you before. Robbie Ferns, hi all. Mike Hadomi, I think. Hudom? Hydom? I don't know. You can correct me. I'm sure I got it wrong. Franz Osmark, hello. Hobie Do, hello. Demkos, how much can a price retrace in between a step? In between one of these steps. So let's see. How much can it retrace in between a step? It goes from level to level, and you could skip 3 levels, 4 levels if you want. So just look at this example here. This was the high. So this range right here broke up. You broke, at the time, you broke 1, 2, 3, 4, 5 levels before finding resistance on the 6th level. And then a majority of all the trading happened in between these 2 levels. Then when it broke south, right? You broke your level that you're sitting on currently. You broke through one level, through a second level before finding support on the third level. And within that level, you ended up finding all your trading happened inside of that level. You had a quick breakout, quick push to one level. You could really box that out, but there's really no point. And then you dumped it down, and all you did here was just split this level almost down the middle. And now you've added more action to the low side. So this area underneath this red line got a lot more attention than it did over here, and that's why this level exists, right? And then it pushed down to a very small sideways accumulation area right here before dumping down on top of our pattern right here. All right, so there is no set rule as to how much it can or how much it can't. It's just that when you start noticing sideways range and then violence, and then sideways and then violence, and it seems to be repeating itself, what we can see and what we have seen in the past is something very unique, but it ends up doing, something similar to this, where it'll kind of repeat itself, but on the way up. So we've seen this action on, I believe it was on Bitcoin back in 18, so sometime last year, and you could find it over and over again, but it also depends on the time frame. This is on a 1 hour chart, so this price action isn't really all that glorious, but you can see how different it is, where this is very much a push down with a push up, a push down with a push up, a push down with a push up. So you're creating lower lows and you're creating lower highs, where this is very much range, right? It's confined to an area of resistance which holds more than just once, more than just twice, upwards of like 10 times this whole area was tested and it failed every time, where this whole support area was tested and it failed every time. Or, well, I shouldn't say it failed. It did what it was supposed to do, right? It provided support, just like this provided resistance. Like this, we can actually, we could do something more like that, so it's more candle friendly, as opposed to coming down and providing a source for all the wicks. So there's no real... There is no number associated behind it. It's just a matter of bouncing back and forth between these levels, and when you're there, you're playing ping pong. You know what I mean? It's a buy low, sell high, buy low, sell high, or buy long, flip short, buy long, flip short, and you do that until the violence stops you out. That could go on for months. We've seen range coins last year. We were going through a whole set. I think I put 80-something charts up, and they were all coins that were ranging for like 90 days or more. And that, like, every one of those is a buy and sell. Every one. If you're a range trader, a ping pong trader. All right, let's see. To confirm either the stair step or I should have probably read both questions in a row instead of just stopping at one. All right, so how much can a price retrace in between a step to confirm either the stair step or invalid? Again, nothing. This becomes invalid when you're back up top and you're now making like a staircase north. Right now, everything is south. Sideways down, sideways down, sideways down, sideways down, sideways. All right? So until we break out of here and come up a level or two or three or four, that is the only time we could say, okay, well, this is getting exhausted and it's time to start moving up in this direction. In which case, this was the idea I had when we were coming out of this zone. We could have either pushed downward down here or push upward up here. We decided to go down. No problem. That's fine. We got levels down here, and we're using both of them right now. Now, we could probably flip this guy in half if we wanted to and swap it into two different ranges. But this was the ascending triangle we talked about earlier this morning, and it did break, and we did get a retest, and it has been going up ever since. So here's the ascending triangle. It's a little sloppy, I know. You got some action over here. But for the most part, this was the level to break. You broke the level, you came back, you retested it. You pushed up, you got rejected up top, right? And this is a trend line right here. Came down, rejected it again. You got a test, rejection again, drop down. Now you're holding this channel that's sort of working itself out now. So that channel is, clearly upward, and that's what we're looking for. Resistance over here is major. So if we could get over just one level, just one of these levels, that would be very unique to this structure, and it would be one of the first bullish things we've seen since the 9th, and today's the 17th. So it's been a few days since anything positive has happened. But we also have areas where we've gotten false breaks, such as all the way up here. You had a nice huge false break, and it all came crashing down. Over here on the hourly, yes, we did get our 20 back, and we're working on getting the 50 back right now. The 20 has not crossed up over the 50, but that is something you look for on the hourly, as well as the 4-hour. Now, we are nowhere near our 4-hour 20, and that really is a vital piece of the puzzle. This is something that you absolutely want to get before you start taking like intraday trades, or like I shouldn't say intraday, short-term swing trades, 1, 3, 1, 5, 1, 7-day trades, something like that. That's what you're looking for. You're looking for reclamation of the 20, and even better, you'd be looking for a 20-50 cross. But that could take a little while, as we see price on the 50 is all the way up to 83. But we know Bitcoin. We know it can do this in a 4-hour candle. $400 candle is no problem. You smash right up here just in one 4-hour swoop, and you got your 20 and your 50 both reclaimed. Come back, retest the most recent area of support, and then push onward and upward until you got something else to get in your way, such as the 200 over here at 87. Now, 87.33 is another major weekly support area, and that is the top of this overall range. So all of this action is all happening inside of these two barriers, right? 75.85 on the low side, 87.33 on the high side. This is all just range, okay? It's all in the time frame you're looking at it from, and then, through the lens of which you look at your price action. All right, Jared says, yo. Tony says, thumbs up. Mike, close, I'll take it. Thank you. Paul, what's up? And damn, Kaz got it now. Okay, very good. All right. Any questions? Throw them in the chat. We're going to talk about trading briefly. This is not going to be like a massive educational course, but we are going to talk about the differences for some traders, because there were a couple questions that came up as far as you want to hold a coin longer because you think it has more upside, or you sold it too early, or you left some money on the table, or the signal got out too soon. So you want to know if there's longer term setups or something like that you could trade. So first, you need to break down what kind of trader you actually are, or what type, I should say, what type of trader you are. All right, what type of trader are you? Are you? How about that? That makes a little bit more grammatical sense. Okay, so what type of trader are you? You might not be able to answer that right away. You might need to know what kind of traders there actually are. And there's a bunch. It's not just one kind of trader. So let's take a look at them. You got scalpers. I know, they just have a cool name, right? Scalpers. Then you have intraday. All right. Well, we'll just do intraday. We'll just leave it like that. Intraday traders. All right. Then you have swing. Now, swing kind of has two categories, in my opinion. So, swing, you sort of have like, you sort of have like a short term, short with just a lowercase h, no reason to make that upper. And then you have kind of like a mid-term, right? All right. And then you have long-term, not a swing, just long-term trader, okay? And then, who's not a trader at all, but we're still going to put him on the list, then investors. Okay. Now, what makes these unique? Well, the one thing you could say for sure is time frame to which they expect to be out of a trade. All right? So let's put that somewhere. Time frame. All right. When it comes to trading, there is something called opportunity cost. What opportunity cost essentially is how much money is your capital making every day, every hour, every minute, right? Is it just sitting in a wallet doing nothing? Then it's not making any money. But we can all agree it's not losing money at the same time. All right, we're talking USD, fiat. All right. If you are a BTC trader and you're just holding Bitcoin and Bitcoin's value is going down, but your Satoshi amount has stayed exactly the same, then you don't have to worry about anything. All right? Because a BTC trader, and it may hurt your ears to hear this, but you need to, a BTC trader does not care about the USD value. Not today. In a few years, sure. Today, no. A BTC trader has one primary objective, and that is to stack sats. That is to use BTC to make more BTC. No matter what the USD value is, or the euro value, or the Kiwi, or the sterling, whatever. Doesn't make any difference. Your only concern is to have more Bitcoin after every trade and never compare it to USD until you are getting into a situation where you're getting ready to exit the market because you've achieved your goals. All right, now, that's getting a little sidetracked here. Time frame per trader is probably the biggest difference between all of these. And it's one that really separates everybody, okay? So let's start with the scalper. Scalpers, generally speaking, 1 to 5 minute charts. Scalpers can be in and out, exit a trade inside of a few minutes. All right. Scalpers can also get themselves up to, let's say, a 15-minute chart, and even as long as a 30-minute chart. But then they start breaching into intraday, and we'll talk about that in just 1 second. All right, so scalpers ideally do not want to hold a position for very long. Very quick. In and out. They're looking for one move up or one move down, and then they're out of the trade. Reassess and move on to the next trade. All right? Intraday is exactly what it sounds like. Intraday is looking at essentially 30-minute to the 1 hour chart, not period, 30-minute to a 1 hour chart, and they could pull some bias or overall, idea of market trends on like a 4 hour. All right. But an intraday, now this comes from the traditional markets. An intraday trader is one who wants to exit all trades by the end of the trading day. All right. Now here, the Euro market is a little different. The American market or NASDAQ and the New York Stock Exchange, they open at 9:30 a.m. They close at 4 o'clock p.m. So that is your time frame, or at least to give you an idea, that would essentially be your time frame for the amount of hours you would be trading or holding a position. So you're talking, let's just say between 6 and 8 hours. Now it's crypto. Crypto's 24/7, 365, global market, multiple exchanges, the whole 9 yards. Right? So you don't have a technical intraday trade. So you use that to your advantage, as you are the type of trader who does not want to sleep with any open positions. Then you are an intraday trader, meaning that either your thesis was correct or it was wrong, but regardless, by the time you go to bed, you have exited all trades. Then you're an intraday trader. Swing traders, these guys right here. So swing traders, again, you have a short-term swing trader and you have like a mid-term swing trader. Okay? For, multiple reasons. So short-term swing traders, typically about 1 to 3 days. You want to have a position open and close it out in about 1 to 3 days. Midterm, like 5 to 7 days, in that ballpark. Right now, this could go up to 2 weeks. All right. And in fact, I'll even go as far as to say up to a month. Because long term, you'll see when we get to long term traders that there would be a void here if we didn't appreciate this up to 1 month. Short term swings, generally 1 to 3. Now they can overlap, where you do a little 5 to 7 in there as well. All right. Meaning like you're just not ready to exit the trade. The thesis is just taking a little bit longer than you wanted to, but it's okay. You're not gonna exit the market because of it, because I'm labeling myself a short-term swing trader. So there's no reason for that, right? This is all just, what do you call it? Customizable, right? Per person. All right. So you want to be in a trade and exit a trade. So you're looking at your charts that you're looking at, which I missed. I messed all that up. So let's do this, and this. Slide all those guys down. There we go. I'll drag this guy over here. And we're going to need 2 of those. So we'll do that, and we'll do that, and we'll do this, and we'll say, okay. So swing traders, 1 to 3. You're looking at like the 4 hour, 12 hour, and the daily. Okay? Something like that. All right, now your midterm traders, it's the same thing here, except they'll probably add the weekly for like an overall bias. Just to get like just like we talked about, traders underneath the 200 are always bearish no matter what. Same deal. Just want an overall bias on, what the market's telling them. So something like this. Swing is obviously the most, there's a lot going on over here. All right. Long-term traders. One to 6 months. Okay? Now, there's an argument to be made for like a 3 to 6 or a 1 to 3 month trader and a 3 to 6 month trader. I'm just going to lump them all into long term. Now, you could do like swing short, swing mid, swing long, and that'll cover your 1 to 3, and then just long term, but that gets a little confusing. Long term traders, 1 to 6 months. Right? And they're looking at, I should probably do this. They are looking, oh no. Oh, everything went wrong. It's okay, don't worry. I can fix it. There is a solution. Okay, here we go. On a micro level, they may pull up the daily. They really should. But it's really daily, weekly, monthly overall bias. Something like that. In other words, a long-term trader is not looking at the hourly chart. That is just noise to them. They don't care about that chop city going on. It doesn't bother them at all. They're not looking at every nook and cranny, every reversal, every pattern. They're looking at the bigger moves, the longer-term trends, right? The slow and steady. These are your traders. Then you have these guys over here. They're way over here. Investors. Investors can overlap as a 1 to 6 month. But investors changed a month to a year. These are investors. Investors don't care about any of this intra crap. They look at the big picture. And this is what we talked about last night about people only trading the 200 or only trading the 5200 cross or only trading the 2050 cross. You know what I mean? So, a cross up and they buy. That's it. I think the last buy was somewhere around $300 and the sell was somewhere around 6,600. That's one trade. It's one trade. All right, but those are investors. Investors don't necessarily trade. They invest. And a major difference here is investors are heavily biased on fundamental analysis. Yes, they will look at technicals. Yes, some will only trade the 200. Yes, some will only trade crossovers. But by and large, fundamental. They're looking for long-term projects that really do offer up a unique buying situation where they feel that they are undervalued at the current market price, and that price over the course of a few years and adoption and the project growth and all that other jazz, the team getting smarter, the roadmap getting filled out, all of that should, increase the underlying value of that particular asset. And that's why an investor is an investor and an investor is not a trader. Okay. So, does this make sense? Does anybody have any questions on this? Now, when we have trades, signals go out. Some of them will say long, like it's a long-term trade. Some will say a mid-term trade. Some will take a short-term trade. Some analysts will like fill that out to how they feel. To them, maybe a 5-day trade to them is considered long-term. Okay? The idea, though, is you want to find the optimal setup that'll give you the most bang for your buck in the shortest amount of time possible. And this circles back to opportunity cost. You don't want to allocate X amount of your capital in a trade that's going to take 1 to 6 months to realize, when that capital could be making percent gains on a 4-hour chart, on a trade that takes 3 days. So for this trade, let's say the overall trade, your take profit, and it happens in 6 months, and that take profit is 30%. That's fantastic. It's a 30% gain on one trade. That's phenomenal. What if you used that same capital and made 30% in 3 days or in 5 days? And then you did it again the next week. And then the next week. How many weeks are in 6 months? It's 52 in a year, right? So 26. 26 weeks of even 1% gains will net you about the same as a 30% gain in 6 months. So think about that as an example. Every week you pull in 1%, or you take one 30% trade and it takes 6 months to get there. All right. That is the overall difference. Knowing what type of trader you are can help you decide on your selection of trades to take. Also, the super long-term stuff, that's for investors. There's an entire section of the website that's just for these guys. And that's all they do. That's all they talk about. Investing. Years they hold. Years. All right? In trading, we trade. And we look at opportunity costs because we don't want something sitting in a trade that's going sideways and doing nothing. Even if you're not losing money or value, it's not gaining anything either. So we'd rather close a trade at break even and use that same capital on a mover that'll move 9% in 10 hours like we saw over here with Matic. You know what I'm saying? So we could close a trade that's going sideways. So Mana over here, right? To de-risk, the stop loss has been raised. Right? We're only at the top of entry. 396, 396. Stop loss raised, pushed up. Why? Well, you want to de-risk in areas of volatility, and we have a lot of volatility, right? Trying to decide if this thing is actually going to hold on that pattern or if it's going to continue down the staircase and make lower lows. You don't want to overexpose yourself. So you close a trade similar to Mana, which we closed, I believe NEO is closed. So you close that, you take that capital, you put it into Matic, and Matic goes 9% in 10 hours. Opportunity cost. Opportunity cost. Now, it's not considered an intraday trade. That's more of a short-term swing trade, right? We see this is, time frame is short. Okay, time frame is short. All right? So knowing what kind of trader you are will help you understand that when you exit the trade, you've exited the trade for a reason. Even if it has further upside, that upside could take a week, a month, 6 months. It could come way down just to go way back up again. That's a whole nother trade. We talked about eliminating larger take profits into the further realms of a TP3, 4, 5, and just turning those into separate trades if the pullbacks gave us a brand new trade, a whole new setup with different RR, and allowed us to get back into the trade. Is it worth it? And that's where you have to start thinking about opportunity cost, time that the trade is in there, and then fees. You're paying a fee every time you buy and every time you sell. So, depending on the exchange you're on, but trading fees add up. So if you think you're an intraday trader, but all you did was buy and sell the same asset over the course of 5 days, and at the end of those 5 days, you should have just left it in there and realized it 5 days later and only accumulated fees for one buy and one sell, that's a whole hell of a lot better than taking 25 trades inside of a week. So there's advantages and disadvantages, but there's never a disadvantage into understanding what type of trader you are. Can you be multiple traders? Absolutely. But that means you really need to understand what it means to be an intraday trader. And maybe you have a portion of your portfolio that is set aside just for intradays. And you close everything out at the end of the trading day for you, and you go to bed. But you still have these open. You still got that Maddox swing going. You know what I'm saying? You're still in that BNB long, a little midterm 2-week trade. No problem. All right, but this part of your portfolio you shut down. That's sitting in fiat or stable or whatever. You could be a scalper and hold midterm positions. Why not? There's nothing wrong with that. I know traders that have long-term positions. They have a swing trade capital, and then they have a scalp capital. So they've essentially divvied up their portfolio so that they have X amount in that portfolio for all of their scalping. And X amount of that portfolio designated for swings, and X amount of that portfolio dedicated to long-term. All right? And then at the end of, 6 months or every quarter or every year, they will analyze their trading journal and they'll see which one was the most profitable. And then they may reallocate. It was 33%, 33%, 33%. Maybe scalping didn't do so well. So maybe the scalping capital is reduced to 10%. Right? And then maybe you do a 50 over here and a 40 over here. Something like that. All right? So does that help? Does that clear anything up for anybody? I hope it does, because it is important, and I feel like it's overlooked. Not a whole lot of people talk about the type of trader they are. Everyone just assumes every trader is a trader and you could trade anything. You can, but you do really want to know. You want to know what kind of trader you are. You really do. It'll help clarify your short-term and mid-term goals. And it eliminates, questions of whether you should be holding something longer or not. If you should be holding it longer, well, then you're a more long-term trader, which means you have different criteria for your setup. And if you have different criteria for your setup, that means you have a different RR and a different stop loss, a different entry, and a different take profit. Okay, all of those happen at the same time, meaning that, as you're looking at long-term trade setups, you're also looking at swing trade setups. Or while you were looking at swing trade setups, you came across a long-term trade setup. Everything becomes more under the microscope, obviously, the lower the time frame you get. Where a 1 to 5 scalper, he doesn't care what's going on in the daily chart. It means nothing to him. He could care less. Price action he's looking at has nothing to do with the daily. Couldn't be further from it. He's looking at a 1 minute chart. 1, 3, 5 minute chart. 15 to get the overall bias of what's shaking locally at the moment for price action. I mean, this guy does not care about the daily unless he's also an intraday or a swing trader, in which case he might be caring a little bit about what's going on. You get it? Does that make sense? I feel like you guys are pretty quiet. All right. Good. Very nice. I'm glad we talked about that. All right. Well, before we end it, are there any charts you want me to pull up? Is there anything you want me to take a look at? Otherwise, we see Bitcoin is getting rejected on that topside level. It is pulling back now. 4-hour chart shows support at the 9 right here. That's what we got. We're just sitting inside that zone for now. So not a whole lot going on at the present moment. It got almost an attempt to the 20, but still not quite there. We just shut that candle down. So it did paint a bit of a shooting star, a little bit of a double top here. So if we do get rejection, look for support back down at this level down here. So you're looking somewhere around like 80-20. If that support does not hold, then that sort of breaks, what was once a pattern with a decent level and a retest and turns it back into, look at these levels down here, back into the 79 zone. XRP BTC. All right, so let's see. The 4-hour chart looks good. Okay, it's sort of painting a little bit of a bullpen up top. Let's take a look at the daily real quick. All right, so daily moves are up. That's good. Sort of riding these levels one at a time. So you broke out of your major resistance zone here. We can turn that green. All right, so now your next major level is this huge one up here. And that's mostly because the low side support did not reach the high side rejection. So this is sort of the meat and potatoes. Now you could slide this up to here, which will still count, but you don't want to get too creative with those because that is a level you'd be looking at. Historical level over here, that's showing 4162. That's a level that again was tested again as support, has yet to really be fully tested as resistance. So expect resistance on the way up when we get there. All right, but otherwise this thing's just chugging along. Everything's fine here. Not a whole lot to look at. It's just doing its thing. You got an upward move, a pullback, another up move, pullback, another up move. You got slight resistance right here that you're getting from these local trends, but nothing overly dramatic. This level could pose a bit of an issue, but it wasn't as big a deal as these other levels. So I mean, you're creeping up there. That's at 38.28. Otherwise, this thing should be able to go up to this resistance zone, at which point it is going to hit your 200. When you hit the 200, that's going to should be, at least on the very first touch, should absolutely be rejection. So a good area for a short on XRP is at the 200 daily moving average. All right. It's just a very key area, and usually the first touch is what'll kind of knock that thing down. Now, we can see price came up, got rejected at this zone, pulled back to the previous structure area, broke back up through. Now, the next rejection zone might be 38.28 before seeing another pullback down here. So if you see a pullback all the way down to 33.92, don't freak out. That's just price action. You have support levels here, right? This whole thing was support, broke, push, pull up. Never got a major retest, just this local level here. The real retest is down here, or even further down at like 33.25 is the better area for a retest. But we could see a push all the way up to the 200 before we ever even get that pullback. All right. But that's XRP. XRP BTC. Looks good. Also took profits on BTC long earlier today at 8,100. When would be a good re-entry? So a re-entry on Bitcoin? Well, I mean, it sort of depends on how long you want to hold it for. Just like exactly what we just talked about. what kind of trader are you? It's dicey to buy now. I mean, the time to buy was right here. I mean, that's the retest of the pattern. Now you're in and out of levels. This is not really a buy zone. I'm gonna really be messing with it right now. It could just as easily break down, just as easily as it could break up. So this isn't really a trade you would want to re-enter on. If anything, judging by support resistance zones, this would be a short. You short it down to support, then you long support. So if that's the case, you know, you could try a re-entry down here, 79.77. A little bit of cushion zone over here. But if this ends up holding, right, if this little channel ends up holding, then you shouldn't even see that. This will be a good make or break, not make, I hate saying that, but this would be a good zone to get a more clear picture on what Bitcoin's going to do. If Bitcoin can indeed break this level, which we could see it has yet to really break a level. One time. It broke this level. Otherwise, the only thing it's ever broken was downside support. Right? So the one time it did break over here, it was also above the 20 and the 50. So you're above the 20 here, you're getting the 50 back here. I would say if you could break this level, that's a good opportunity for a long. I wouldn't buy resistance, but you could buy the pullback. So, but you have to be careful about that as well. Because once you break the zone, doesn't mean it's going to keep going. You broke it, 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 and then you finally got a pullback in the same candle. This is a 1 hour chart. Then you went sideways in between these two levels. So now what I would say right here is, okay, we broke 1, 2, 3, 4, 5, 6 levels, and we closed back between these two levels, and the next candle tested both sides, tested the low and the high. I would be shorting this. I would be shorting this zone. All right, because we broke into a new zone, and then we tested a low and a high. So we just established our new range. So I'd be shorting that and long in this. So I would take a short here, I would take a long here, I'd flip it short here, I'd flip it long here. I probably might get stopped out of the trade right here, but if not, then I would still be long, sell short here, buy long here, right? I would sell short here and get stopped out up here. Okay? But that's like, what, 8 profitable trades against like 2 not profitable trades? That's pretty good. Pretty good. All right. Let's see here. Yep, no problem. Robbie, Data BTC. Okay, we'll take a look at that. All right, so what's Data doing? Let's probably get off the 4 hour. Okay. Yeah, it's trying to post a reversal. It's working on it. You can't get fooled by stuff like this because we see previous action, right? Previous action, dumped, made new lower lows. Previous action, dumped, barely made a higher low. Previous action, big push, big dump. Previous action, new lows. All right? So, yeah, I mean, some things looks okay, but you got to take it with extra precautions. Like we say, like counter trend trades, like this is 100% counter trend trade because the whole trend is down. There's no part of this trend that is up. This thing has done nothing but lost value from day one. And it's continuing to do so on a daily basis. So even though you got minor reversals, right, becomes inherently more risky than most or like a lot of other trades. All right, so this would be a major level over here. And that's a resistance zone. So this one's quick and dirty. Break and close above it, buy long, aim for the 200. Otherwise, I wouldn't touch this thing. You got good levels over here that are respected. So you got an area, a nice area for a stop loss underneath trend. This looks like it's a bit of a channel. And probably not the prettiest of channels, but a channel nonetheless. This whole coin is just, these are all pump and dumps. This is just super scammy style trading, which is annoying, but I mean, it is what it is. So yeah, same deal. I would wait for this level here, and I wouldn't take anything until I broke and closed that level right there. All right, so break and close above 162 on the daily, and then I would probably shoot long up to 222. All right, ZC. Oh, boy. Let's see. Now I have a better chart with more history somewhere. I don't know where it is. That's all right. We'll take a look at this one. All right, so this is the reason why you pull up the chart that has a lot of history. You would have never gotten this on the other chart. Look at these weekly support levels. You see that? It's exactly where we're on right now. All right, playing with fire. This thing dumps. There's no telling how low it'll go. Under here is price discovery. You got $36 now. I mean, even if you were to throw an extension on here and get an idea, I mean, good luck. Good luck. Can't get anything on here. We could throw in like a 127. We got a 127. Forget about it. No. No telling how low it could go. Your 127 is at negative $182. They got to pay you. All right, so now that we have like a general overall bias on it, you know, pull up the daily chart, get a better idea on what the local action looks like. All right, so we had like a bowl, little cup and handle action. Handle obviously broke through. Nothing good came out of that. Whatever this wick is down here, we're going to ignore that for the moment. We're going to take this local trend up top. Right, and we'll just bring the swing fail right here. Literally anything underneath that line is going to be bearish. For now, we will take that support level right here as our close to support we can get. Low side on here is what, 30.19? Just clean this up a little bit. All right, so you'd be targeting the 2-3, which of course is not on this template, which is confluence with your 100. Unfortunately, there's nothing bullish about this. Yeah, you have a symmetrical triangle that formed after a big downward break, but it looks like it already lost it and broke south. Yeah, broke south with a retest. This does not look good. So there's your bear pennant. All right, here's the flagpole down here. So here's your flagpole. There's your flag. That's your pennant. So now you would take this here from high. Well, I'm not going to use that low. I'll use the low of the pattern, though. From high to low of the pattern. Drop that out from the breakout. So give you an approximate idea, $16 for Zcash, give or take. You do have you got a confirmed breakout with a retest. So there's the breakdown. There's your retest. Yeah, I expect further downside. All right, cool. Let's see. Can I link my chart? What chart, Jared? Oh, ETHUSD, what's popping? You come in after hours and you want to look at your coin. You're unbelievable. This guy. He's lucky he's family, because otherwise, get it. ETHUSD. Yeah, still not good. There's nothing good about this. We're south of trend. Break and close below. Retest up. Rejection on trend. This is an SR flip. Support resistance. This equals further downside. Something like that. All right. Now, again, this is not the daily close, so we got a couple hours here. Push it up. Push it up to 178.15 and we could talk. Until then, no dice. All right, cool. JB, how many hits of support resistance levels do you need before you decide we're in a channel and can start shorting and longing support resistance levels? Depends on the time frame you're on, but like a clear channel. So let's go back to Bitcoin. And let's go back to the 1 hour chart. Of course, let's go to the right chart. All right, so I would consider this a channel. Although it's not beautiful, I would still consider it a channel. So what I would look for is a 2 and 2, meaning 2 touches to the top, 2 touches to the bottom. Right? So you got, and I don't mean right next to each other either. I mean interweaved, right? So if we're calling our starting point touch 1, touch 2, can we call this a touch 3? I guess. Depends how lenient you want to be with it. And then this would be a touch 4. Now, again, this all got broken, so you have to at least understand that this is zone, this is range, and that's allowable. You're also on heavy support, so there's a lot of factors that come into play. But all things considered, let's say that this was our channel, right? Something like that. I would allow for something like this. So if price is coming up into it, finds resistance, it pulls back, it finds resistance again, and pulls back again. Now I would consider this being a long and flipping short up here, right? Barring any other potential reasons to go short, such as this area of resistance right here, would also give me confluence that, yes, I want to be shorting that. But yeah, you want multiple touches. If it's only a few touches, right? If all it did, price came up, and all it did was just that and that, I don't have any indication to tell me that this is going to be a short up here, that it's going to come down. Why wouldn't it just keep going up? You know what I mean? So there's a lot of influences or influencing factors that'll come into play. But just like a trend, with a trend, you always want, you want one established trend. And by that, I mean you got a high, a low, a higher high, and a higher low. Now you actually have a trend, right? But you don't have it until this reverses. Price needs to reverse, because if it doesn't and it does this, then what kind of trend do you have? You don't. That is no trend, right? So essentially you need that fifth point, because that's what's going to dictate that you actually got a reversal. Because if you don't get a reversal in price action, well, then you don't have anything to go off of. And when we talk about trends, right, we talk about a verified trend or a validated trend. That's 3 touches. Why? Because, your first touch is just where you start the line. Your second touch is what draws the line, because now you have 2 points. But the third touch, that's what validates the trend. Without that third touch, all you have is a line, and that line means nothing. Absolutely nothing. Gives you an idea of where price could go, but it really does mean nothing at all. Couldn't mean less. It's just an idea at that point. It's validated on the third touch. Can we look at mana? Missed it if you covered it already. All right, so we'll do mana, and then that'll be the last chart. I have a ton of work I still got to do. Mana, BTC. All right. So Mana's riding the 50, and then it lost it. Overall, the 1 hour is looking fairly bullish. Let's put the daily on and see what we got over here. So daily did break, so that's good. Broke out and started doing this little bowl-shaped action over here. This could result in a bit of a cup and handle. That is absolutely a potential. So major resistance level, or at least first level of resistance, we should be seeing something in that ballpark. There's really nothing here to say that this is going to stop. So, Jen, just like this, for a trend, or a channel, I should say. So on the top side of the channel, I'm not even counting this stuff, but the top side of the channel, I'm starting right here. Then I have a second touch. This gives me a line. And then I have a reaction here, rejection, rejection, and this right here is kind of like a perfect touch. All right? So this validates the upper portion of the channel. The lower portion of the channel is support, 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 support. Bit of a break, all right, but we can allow some tolerance of, misbehavior. And inevitably, since we can look in hindsight, we know that this was absolutely support. So at this point, yeah, we're good. That's why if Mana comes down here to 366, it wouldn't bother me at all, because this is just support. We're just riding the channel up. It's no big deal. All right, pushing back down and finding support confluence area of the 20 and the 100. Yeah, something down at 359 is no problem. This is how people add on to their positions. So if their overall target is up here at the 200 at 552, they might be adding on a position here, pulling a profit here, adding on another position here, pulling another profit over here by structure levels up top, like this, allowing that to pull back, add on again, and push up. So they sort of like DCA up and DCA out as they can like scale out. But this is a great pattern. Excellent, excellent, excellent pattern. Good push, break, perfect pullback retest, and then bang, off to the races. Yeah, it looks good. All right. Okay. Let's see. CEC, further downside, you said earlier, then why wouldn't we close the signal? That is up to the analyst. Yeah, whatever they're seeing on there, right? They will give it an allowable threshold, to which point the stop invalidates the trade. Right? So if you look at a chart and I look at a chart and 1,000 other people look at a chart, we're all going to look at something different. Certain levels are going to point out. Certain practices and theories are going to go with that. All right? And a lot of people wait for the daily. I'm one of them. This is why this is abnormal for me at 4:30 in the afternoon. It's not the daily, right? So we take a lot of information from the daily chart, and it's crypto, right? Anything can happen in the next 3.5 hours that completely changes the theory of further downside for ZEC, and in fact turns it very bullish. But it would have to be a fairly good candle coming at the right time and breaking certain levels of resistance or finding levels of support. Right? There's also 1,000 other indicators as to what you may take a signal off of. Right here you have confluence in RSI, both 714, two different periods, fast and slow, that are both showing further upside with current pullback. Current pullback. MACD over here is very indecisive. This is chop. It's like signal is go long. All right. Now, of course, this is for mana, but I'm just saying, there's 1,000 different ways to decide if you like a trade or not. Just because I don't like it doesn't mean it's not a good trade. It could very easily be a good trade. But yeah, whoever created that, it is their responsibility to monitor it, maintain it, and then the stop loss is there for a reason. So the stop loss will signify that that is the level to which it invalidates their thesis. And if their thesis does not get invalidated, then it should do what it's supposed to do. And if it doesn't, because for whatever reason, then the trade might get closed due to either overexposure or opportunity costs, like what we talked about earlier. You know what I mean? So if it's just in there doing nothing, and it could be making money on your capital, right? Well, then clearly we want to pull out of that and get into something a little bit better. We don't want to be overexposed really at any time, but we got to manage our risk the best way we can, spread out through, different trades. Sound good? Excellent. All right, everybody. Well, I do appreciate you guys hanging out. Let me know in the Discord if this is a good time. Just give me some feedback. Let me know what you guys are thinking so that you could try to, make something work. All right. Until then, though, I'll see you guys on the Discord. I'll be floating around here and there. And I want to see you guys on the exchanges. And until then, happy trading.